Hello and welcome to the latest episode of FUMO, Future Money. Gaurav and Ronit, back in Dubai. Stefan, welcome. You're in Vienna today.
Hey guys, yes indeed, that's where my home is. Yeah.
Vienna, the beating heart of fintech investing, huh?
Yeah, happy to just give you the short and important of Speedinvest. So I mean really it's an early stage tech fund in Europe, starting of all places in Vienna, which obviously is not a massive tech hub, but the great thing about starting in Vienna is you have an international expansion strategy from day one, right?
Hmm.
Typically Germany, and that's what we did, right? We started 12 years ago, went to Berlin, did a few good deals, and kept on raising and investing. And fast forward, I've raised over €1 billion, and put a lot of that to play in Europe, but also in fintech, in particular outside of Europe. And I'm sure we're going to talk about that. So we're actually one of the leading VCs also in emerging markets, especially on everything fintech. And so it's been quite a journey from, Vienna, Austria to Ghana, where I was recently, or Dubai or Pakistan. So, and I would say, we obviously cover all the verticals you would expect: fintech, deep tech, health tech, marketplaces, SaaS industry, have offices across Europe. Our largest office is actually London, then Berlin, Munich, Paris, Vienna, and building a team right now in Dubai. So yeah, excited to be on the podcast, and obviously a big fan of what Hui and the guys are doing, and been seeing those guys for many years in Singapore at the Fintech Festival.
Awesome, awesome. Now you mentioned there that one of the advantages starting in Vienna, Austria, is that you go international pretty quickly, whether you're a fintech or an investor. And you've just mentioned there from Ghana to Pakistan to points beyond. What is it like when you invest? I know fintech is the same sector, but there must be so many differences when it comes to the local market, local economies, currencies, operating models, and also culture. Talk a little bit of how your experience around the world has shaped you as a fintech investor. What are sort of key lessons learned, similarities, differences between these countries?
There are obviously massive differences, and look, it was an evolution. Uh, so for me, there was a very instrumental experience in investing in a company called EasyCo in Turkey.
Mm,
Obviously, Turkey is not Africa, but Turkey is certainly not Austria, and is actually extremely innovative banking place. I mean, people who are in fintech know that Turkish banks, especially on the retail side, have always been very innovative.
yeah.
And so, here we are, a sort of second generation German Turks, right? The sons of migrants. Their parents came to Germany in the 60s.
Mm,
Decided, learned that. I got to know them at first data. Like most things in life are sheer coincidence, right? So
mm,
Barbaros Özbugutu was, the head of call center and operations of a First Data business. When I was at First Data, I was one of the co-heads of Europe. I got to know the guy. It was like very clear just meeting him that he's like an outstanding character. And so we kept in touch, and post First Data, he called me up and said, look, there's this massive opportunity for like a, Adyen of Turkey, PayPal of Turkey, and I wanna really do this. He had just left Klarna. He was one of the first employees of Klarna in Germany, so he really knew payments. And so these three gentlemen actually took a lot of risk. I mean, they were not 25 anymore. They had little kids, and so they sort of re-migrated to Turkey, and with an Austrian backer. And so it was a wonderful experience. We were quite concerned at the beginning, right? How are these guys going to be received in Turkey? Again, innovative market, and these guys come from, how it is. Like people come from outside, so they get a very not necessarily welcome reception. It's like, so what are we going to learn from you? And actually, they built this fantastic business, and it was solved an obvious pain point. In the past, as a e-com business, you would have to line up in the branch of a Turkish bank before being able to accept Visa, MasterCard, and then you had to sign up a bunch of other banks as well. And they created this one-stop shop, this one API to be able to accept all payment methods, right? I mean, today it's like, sure, what else, right? But at the time, it was a really big move. And they took the market, and when PayPal left Turkey, they also took the wallet market. So it's an interesting case where actually politics and sort of, if you will, nationalizing the payment infrastructure in this particular case has helped iyzico create a massive moat and became sort of one of the stars of the market. And we ended up selling it 2018 to PayU Naspers, probably a bit too early because COVID and all created they went like 10x since then. But I think it was great. We made a good return. And for me, that was a very instrumental experience because it was basically, hey, here's an outstanding tech team that is solving a big pain point in a massive market. And it worked, right? Could iyzico have been a bigger exit in the US, same team, same tech, or in, I don't know, a European market? Maybe. But it was still a great return for us. And so for me, it was like, hey, we can do it here, we can do it anywhere. And so we decided then to also take some risk in other markets. Yeah.
It's interesting what you say about going from Germany, of Turkish heritage, but basically people who'd worked in Germany going to Turkey and backed by an Austrian. Because as you said, Turkey is probably miles ahead when it comes to digital banking. Maybe I'm exaggerating now, but my experience of the guarantees of the world and the Turkish banks from 20 years ago versus the German banks is like one is first world and one is second world, and it's not Germany that's first world in this case. And so 100%. it's kind of interesting, right? That they weren't kids; they were experienced payment professionals, so they were going back to their sort of ancestral homeland. But what did you kind of learn in terms of generalizable traits or trends from that? Like either about founders or founding teams or about business models, having seen this, you said maybe you exited too early, but it was a success nevertheless. What did kind of that iyzico, sorry, mangled the name there, iyzico experience teach you that you then used in, I don't know, in other parts of the world? Because you became, when people talk to me about Speedinvest, usually, and they don't know that I know you, they'll go, "Oh, they're one of the leading fintech investors." I'm like, "Oh, really?" And they're like, "So you're seen as one of the, in Europe, in EMEA, one of the leading fintech investors." What did you kind of learn from that experience with Barbaros and the team, apart from don't sell too early?
Well, in hindsight, obviously it went 10x, but not in dollar terms, right? So that would be my response. But
good old lira.
Yeah, exactly. As I said, I think one experience was really instrumental is like, hey, these countries obviously have additional levels of risk in macro that you cannot control. Yeah. And that's super scary for any investor. But here's an experience where we were able to navigate it. And I don't think it was sheer luck, right? So there's a lot of things you can actually do to try to navigate it. And of course, that gave me the confidence to go to other markets where macro is even more difficult. So that's one. The second one I would say is I do over-index on mature founders in these markets, I have to say.
So in which markets? In more macro risky markets? So
there wasn't any sort of rule around this, but it so happens if I look back at our top 10 companies in regions like Nigeria, Egypt, Pakistan, Mexico, then all of them are really mature founders. Let's take Abi, that like Omer
Yeah.
Ansari, right? He was at Morgan
Yeah.
Stanley. He was at Vostok, so he was a VC himself, and then he sort of teamed up with another very sophisticated Pakistani that happened to live there, and they created this great business. You have a lot of those stories, right? Look at the Move founders, Ladi and Jide. I mean, they're Nigerian, but they're really born in Britain, born and bred in Britain, went to great schools, and sort of also had their own personal discovery of Nigeria in a way. I will never forget. I hope Ladi is not gonna give me a hard time for telling this, but I once, at the very beginning of our journey, he was on the phone, talking with one of his Nigerian teammates, and he went into this English, which was entirely different. It was this like Nigerian English. I don't even know. I'm sure it has a name,
Yeah.
but his whole body language and his whole tone changed. And then he told me afterwards, he had a big laugh, and he said, "Look, I had to actually learn that literally, because with my Oxbridge, I wouldn't sort of be taken seriously with these guys."
Yeah.
So you see that, I think. So it's maturity of the founders, and it's so very often they also have a kind of a hybrid cosmopolitan background. So they know the country, but they can also speak the international language of finance, and that's obviously a very powerful combination. So I would say those are some of the things. And of course, also, if you start focusing on those founder profiles, quite automatically, those are the people that will probably not be happy to just build a domestic tech business. They will always be very ambitious and try to build really a big outcome. And I say this because we do have every once in a while founders in seed, pre-seed, that turn out not to be as ambitious. They're very happy to be a profitable business, growing nicely in a certain market, but that's obviously in our industry not enough. You have to create a lot bigger companies and pan-regional companies. And I would say in emerging markets even more so, maybe with the exception of Brazil and India. We've seen like really outsized outcomes there, purely on a domestic growth story, but otherwise, typically you have to build a pan-regional story. And in fintech, it is extremely difficult to expand in other countries. I mean, even within the EU, it's almost a joke. It's called single monetary union, but like N26 going to France at the time, they had to apply for a French IBAN, which had a different length. And that actually means that if you're French, you cannot do direct debit with your German IBAN. It's insane. And they still haven't figured this out, right? So imagine you go from Ghana to Nigeria or to Kenya in terms of licensing and regulation. Even going from UAE to Saudi, it's a huge barrier. And so, of course, that requires an extra funding. It requires extra maturity of the founders. It probably requires that you bring in very senior, expensive, fit and proper people to navigate your license and then to actually run the license later on. So that's a tall order for any tech business.
Just to sort of double click on that point about maturity and age and experience, how much of this do you think is about the domain or the industry we're all in or adjacent to, i.e. fintech? How much of this is that it's fintech versus, say, I don't know, other tech, say social media or something else, or deep tech? It's fintech. And how much of it is that you've, tapping into your Viennese heritage? I guess from Vienna, people always looked east. You've gone into these amazing exotic markets that in many cases Gaurav and I have personally invested in and operate in, but the classic European or American investor doesn't invest in until 2021. We had the kind of, kind of the Zoom capital phase when everyone began investing in places like, Nigeria is the next Brazil and Pakistan is the next Indonesia. Until 2021, most investors are ignoring these countries. But you were there from, I mean, so I guess two multifold question. One is the maturity of founder point. Do you think this is a lot to do with fintech? And secondly, why this EM fascination? Is it just something that happened by chance, or there's something in the water in Vienna?
Well, first of all, I should say I'm certainly not first generation investor in these markets. There's other folks who've been really doing this for 20 years. I mean, if you look
Yeah.
at folks like Andy Dervishi from the IFC, who I
Mm,
saw recently on the FinTech Africa conference, I mean, like IFC has been doing these markets for decades, right? So
yeah.
obviously not a classic VC, but nevertheless instrumental in
Yeah.
setting the ground for all of us. So
Mm,
we're standing on the shoulders of a lot of very big risk takers
mm,
actually.
mm,
Secondly, I would say look at the EM team at Speedinvest. So
mm,
we have Deepali Nanjar, she's obviously Indian, sitting in London. We have Rana Abdelatif, she's Egyptian, moving to Dubai. And then we have a Mexican, we have a German Spanish guy, and an Emirati joining us, Faisal Belul. So this is a very, very international team, right?
mm.
And when I retire, there will probably no Austrian left, right? So, and that's perfectly fine. I think look at Norscan, right? I mean, there's like if you look at the
Mm.
Nordics, there's significantly more and longer intervention investment into places like Africa, right? There's a real tradition
Mm.
coming probably more from the impact side. And I
Yeah.
guess in Africa,
And
we're
also,
in
they
a
were
very
very into
interesting,
Eastern Europe
yeah,
from a very early period.
yes,
So the Swedes, even mutual funds in Sweden were like into Eastern
correct,
Europe and Russia like for 20 years now.
correct,
They've been sailing down the Volga for several centuries, so they're kind of used to those markets.
100%.
Yeah.
So it started here, but it's morphing into something that I'm very curious how it's going to look like 5 years from now. But let's take it one step at a time. I think
Mm.
we are being it's an evolution. We're learning. I think it turns out that we have picked well. I think it's a good, strong portfolio.
Mm.
Um, and going to Dubai these days, opening an office is not like a huge, risk you're taking, really. Let's be also very clear. I think the move to GCC has to do, of course, with capital. And it's interesting. I mean, if you will, we're just following a trend. I mean, these markets have positioned themselves so well, similar to how London has positioned itself to Europe. These guys are positioning themselves as a real hub between Africa and India. We see a lot of Indians, right, in Dubai these days as well. So it's a great hub to be, and
Mm.
hope it will help us also create some liquidity in the fintech market, which we all need and look for.
In, inshallah, huh, Gaurav?
Inshallah, capital.
Ah,
Yes.
Inshallah.
inshallah indeed. Inshallah indeed.
I'm going to bring in Gaurav into the conversation to talk about mature founders.
Oh boy. Oh boy. Well, you're sort of looking at a pseudo mature founder now. I've aged into the role over 20 years.
Which bit are you pseudo? The founder, the maturity, the which bit
Uh,
are you pseudo?
oh my God. All of the above, just like my portfolio, if I look at it. But speaking of trends and maturity, thanks, Ronit. I mean, Stefan, thanks again for being here with us. I think, one thing that's super interesting for our listeners to know right now is funds have a life cycle of their investing. It- could you just refresh the audience on what the size of the fund is and what part of the cycle are you in right now? So when I say that, usually the first half of a fund life cycle is for deploying capital, and the second half is for follow-on investments into what we call the winners, for lack of any other better terminology, in a portfolio. Could you just tell us about a bit of that so we have a refresh for our audience who's listening?
Sure. It's going to get a little bit complicated because we have several different funds, but I'll just try to make it super simple.
Thanks.
We have raised, our fourth flagship fund, closed it last year, 350 million. This is predominantly Europe seed pre-seed. There is, in addition, an opportunity fund that we raised 220 million that invests into the pro ratas of our winners, and there's a little bit of an allocation for Series B as well. So currently, we're investing out of that pot for initial investments, and that does include there is an allocation for emerging markets as well. And so we're very much in that still in that initial investment phase. At the same time, we are raising a emerging markets fund that is centers around fintech, but we define it a bit more broadly because I think also the fintech market is evolving. We do see highly interesting embedded fintech models, sort of no fintech outside, but fintech inside, and being a key monetization driver. Think agri-tech, health tech, climate tech. Very often these models have, or even B2B commerce have strong fintech monetization, be it through working capital or through account and payment business or cross-border payments, trade finance, etc. So we like all that, and I would also include finance tools in general. And so we're raising this fund. It's going to, our target is 250 million. And it's a big deal for us. It will be the first fully dedicated EM fund. So no European investment fund. That's a real first for us. The second first is we based out of ADGM and led by a team between Dubai and London. And of course, venture partners in various parts of Africa, Pakistan, etc. And with that fund, I mean, we want to provide actually not seed financing. We want to provide early growth capital, which is obviously missing everywhere, but especially in some of the emerging markets. You mentioned the 21 moment where suddenly US growth investors came to Africa. I mean, some of them did come to India before that. But of course, there is right now, there's a bit of a, disappointment, or like there has been clearly, people are on the sidelines. A lot of the growth funds are on the sidelines, and that's not great. So I think we want to, provide that smart growth capital for Series A, Series B in particular, and, take strong ownership positions and, go into the boards and really roll up the sleeves and do what we always do, is like hustle for the founders. And so, I think it's there's a lot of interest for it, but fundraising is really difficult these days, right? So I think we want to marry, that is probably quite unique. We want to marry sort of Africa and GCC here, which are typically, the way we think about it is sort of MENAP. So Islamic, Muslim, Northern Corridor, North Africa, all the way to Bangladesh, with a clear trend towards setting up headquarters in GCC, and then Sub-Saharan Africa, which is obviously an animal all in itself, with the hubs in Lagos, in Nairobi, and in South Africa. So, that's our plan.
That's really good to hear. If anything, hearing people who are based out of Europe having conviction about this region, given your track record as an operator, plus given the background of your insights for turning successful investments into exit opportunities repeatedly, I think that's really reassuring as a signal to the market that there is still opportunity out there. Yes, fundraising is hard, but it's good. It's good to give that or hear that signal from someone who's a professional in the industry. We do it at the angel investing level, but that's really, really reassuring. I'm sure everyone who's listening will also have a breath of fresh air in saying that's a nice way to look at things, because people come here to our region to raise capital for external geographical placement, mostly on average 90% of the time, or 15% of the time it's only for redirected to this region with some caveats. So that's great. But also that's very close to some of the conversations you and I had, Stefan, at the event earlier at the Museum of the Future, which was about the number of mergers and acquisition opportunities that are coming into this region as well. I think valuations have softened, and because funding has slowed down, good companies are generally merging as well, which actually makes them stronger. Maturity of companies from the continent of Africa coming into the GCC region, and likewise those from the GCC looking for new opportunities by expanding their services and operations into Africa, actually wouldn't have happened faster if this scenario wasn't set, because valuations and grandstanding on either side would be far too high for people posturing, saying who's more valuable than the other, as opposed to a hunger for what we now see as EBITDA profitable goals. But extending from that a bit more, we've talked about fintech a lot. And, we use Y Combinator as a barometer for what is either hype or a trend, if you want to categorize it from that. We saw Y Combinator fintech was possibly, before the funding winter, the huge amounts of companies from 80 scaling to 300 companies plus in the segment. Most of them were fintechs. And now we're looking at AI. But in your review, in your point of view, looking at these markets, what are the sectors you're particularly interested in? We haven't touched upon things like Web3 or blockchain. Are those also in your interest? Are you seeing something different? Could you help us understand your viewpoint there? What do you say?
Sure. So you threw up a lot of different topics. I mean, just quickly, I would say we're talking about a massive, big region of the world, and of course they are all moving at different speeds at the moment. So if you look at India, obviously, right, there's tech IPOs happening right now. I mean, there's no tech IPOs happening in Europe that I know of, especially no successful ones. In India, it's happening. We saw, obviously, not long ago, Brazil really taking off with very healthy IPOs, tech IPOs. And so, and look at Saudi now, like just last week, or was it 2 weeks ago, right? A really significant tech IPO, like how many times oversubscribed, insane. And so there will be more. So you have these various markets for different reasons that are producing liquidity and access. That's fantastic, because we need that. That's part of the story.
Yeah.
You just have to time it right. It's extremely difficult to time it right. That's the challenge. But just again, just to, we have to take a differentiated look at these markets. M&A, 100%. Look, this is the golden opportunity right now. If you sit in Pakistan, Egypt, Nigeria, you want to expand, this is the time. I mean, if you have the right investors, if you have the right founders, if you have, ideally you're profitable. I mean, you go out there, you roll up the market right now. And there's so many fantastic share deals to be had. And again, we're in fintech, so it's so much easier to buy something with a license than to organically enter these markets, apply for a license, etc. Right? Again, I mean, let's also be clear. I mean, that is doesn't always work very smoothly. I'm sure Sama is not very happy if they give like a Saudi company a license and like 2 days later it is acquired by a non-Saudi company. They won't be happy if that happens too often, right? So, but I think there is a great opportunity right now, and our good founders are taking advantage of it right now as we speak. So that's great. Profitability, it's also something I like saying also. I was speaking in Ghana recently at a conference, and it is so much easier to actually go profitable with a fintech in these markets than, let's say, compared to Europe. I mean, there's no comparison, and you don't have to be predatory or anything. You can charge for your services and go profitable a lot faster. I mean, that's typically forgotten, right? But right now, that's a real plus, despite all, of course, the challenges some of these markets have when it comes to currency depreciation and whatnot. Areas we like, and on the YC, maybe quickly, yes, of course, you could argue they have created this incredible hype, which we now look at, and we're like, clearly, a lot of these companies are terribly overvalued, and it's actually hindering them to do proper rounds. But at the same time, they have put Africa on the map for a lot of American investors. And some of these companies will make it and will be successful, and they will draw in additional American investors. I was so happy for Steve McLaughlin to organize this Fintech Africa event in New York earlier this year. I mean, it was just fantastic. I mean, just seeing all these scale-ups from Africa, these incredible entrepreneurs all in one place. I think we all left super pumped up that, we are exactly, we knew, again, we were reminded why we're doing what we're doing and how big the opportunity really is. Web3, blockchain, AI, yeah, I mean, clearly we are looking at this. I mean, we have made investments in Europe in all these areas. I mean, this is not Web3. This is more like classic crypto exchange. Bitpanda is one of our absolute winners in the European market, and they've done extraordinarily well. By the way, Bitpanda has recently opened an office in UAE, and you see how small the world is getting, like UAE having a very friendly, crypto-friendly jurisdiction. And by the way, they're not entering directly. They're entering with their BaaS product, so with their white label product, so equipping banks, GCC banks, with the ability to offer fully regulated and compliant crypto to their customers. And we see a tide that went to India, right? I mean, we see much more, cross-border activity, which is exciting. We are scratching our heads on particularly the use of blockchain in the currency space, right? I mean, in theory, markets in Africa would be the perfect markets for this, right? There is obviously massive currency problems. People are losing their savings in local currencies. So, having some kind of stable coin to hang on to would make a lot of sense. The problem is of course, it's huge regulatory risk, right? I mean, you have to really watch out. There's some countries in Africa that have completely liberalized. Others, you get thrown in jail if you do this. So it's like a wide spectrum of regulatory regimes. So we have to really watch out. We typically err on the conservative side when it comes to these things. So there's a few companies like Yellow Card, others I'm sure you've heard of, that are seemingly doing extremely well. And I'm a big fan of Chris Morris. But we just didn't, we couldn't get there yet. Because the regimes are still very, very unclear. But I'm 100% sure a few winners will emerge when it comes to the currency use case. There's also interesting models, right? The other big problem is not just keeping your savings in real away from inflation, but also for real big businesses to get hard currency, right? It's a massive problem, obviously. And so there's very interesting models emerging to tackle that, again, using stable coins. So yeah, we're talking to these players. We're very interested. We believe there is an opportunity there. You just have to time it right. And you also have to invest again in the right founders. So give you an example. Like EasyCo, which we talked about. I mean, they entered the Turkish market before there was an e-money license. And we knew there's going to be an e-money license, and maybe it's going to be fashioned after the EU one. But, Babos and Co, they always were close to the regulator. They went there, they were friendly, they explained their view. So they gave a lot of input. And those are the founders we liked. Same with Bitpanda founders. I actually got to know those guys in the advisory board of the finance ministry. because again, they were educating the finance ministry and the regulators about crypto and cryptocurrency. And guess what? I mean, that's in everybody's interest, because you do obviously influence that regulation to obviously be innovative and open to innovation. And so those are the founders I like. You have to just build that in. You have to anticipate regulation. You have to be in contact with the regulators and the politicians to make your voice heard and make sure that, you know, your investment isn't wiped out from one day to the other, which can always happen in those markets.
How involved are you as an operator in these businesses, given the varying degrees of the capacity of founders these days? Because talking about founders and talking about the operational involvement you would be in as an investor is on a sliding scale. The team you just talked about seem to be very mature founders, have deep sector expertise, and really rolled up their sleeves and got involved. But in this region, there are very few people who have decades of experience, have been out here problem solving on scale between multiple countries. You can probably count them on your hands. You know, Hossam Arab, who exited Namshi and then started Tabby, was one. Certain other people, you know, who have successfully exited Kareem and perhaps starting would be good candidates. But they're still much, much, much younger, or perhaps might not have the same sector expertise. The same thing can be said with open API banking, card issuing products. We've seen many of these examples, not only in the GCC region, but the same is for the continent of Africa. So how do you balance that out with somebody that has to not only manage an investment or several investments, but your time for an operation function, perhaps to support these founders? Are you seeing a trend, or are you seeing an increasing number of good founders, or are you finding it difficult to do that in this from the African continent all the way to GCC compared to Europe, Istanbul, you know, Turkey, or other markets?
I think, I mean, you mentioned Osama. You know, he's the classic case of a serial tech entrepreneur.
Yes.
You know, the ones we've invested in most cases were mature because they've done all kinds of other things, but not necessarily started a tech business. So I think maturity is not necessarily tied only to having built a successful tech business. Again, Ladi, Chidi, Omar, just going through the list, Manolo in Mexico. None of them, I think ultimately all of them are first-time tech founders, but they're all entrepreneurs that have started something. They've started businesses. Some were successful, some failed. None of them made them like serious millionaires, which is a great thing. Otherwise, they wouldn't have continued. Maybe.
Yes.
But I mean, look at the Bitpanda founders. I mean, this is probably the craziest trio of dudes you can ever find, right? I mean, Paul was a poker player, a very successful one, by the way. Eric was a mechanical engineer in commercial shipping. I'm not kidding you.
Wow.
And the third guy, the CTO, is the son of Austrian farmers, and figured out algorithms for all their pigs to be fed at the right time automatically. Some kind of pig feeding algorithm. I mean, it's so. What I'm trying to say is, I mean, people come from all walks of life. I would say most of them that we like are beyond their 30s, probably beyond 30. So not the really young ones, but of course it's a kind of a stupid statement to make. There are outstanding talents. They're like 19 years old, 21-year-old. We have seen them.
Yeah.
But the thing is, what is so under-indexed is people think VC is all about picking the right team. I mean, there is some of that, of course. There's this gut feeling about picking the right, but then it's just hard work, years and years of hard work. that team always changes, and you have to help them go through the right changes. By the way, the board, which is completely under indexed on board and co-investors, right? I mean, you should spend a lot of time picking the right ones. One bad person in your board, and that can destroy the company, literally.
Yeah, we talked about that too, didn't we?
Yeah, it's and of course we now see that looking back, right? We're at the end of the cycle. The last 2 years were not a lot of fun in the portfolio. And of course, you could just see the tensions between early stage investors, later stage investors, founders that have, not started the transformation from founder-led to a professional executive team. Now, when the shit hits the fan, these things become a real problem. Because solving them in that situation where you're running out of cash is just not a great idea. You don't have the bandwidth to actually deal with it. You have to anticipate these things. So I'm saying good corporate governance, good company building skills. There is no founder that, 25-year-old who can do this alone. They need support for that. And so we're back to maturity. Of course, your probability of this working out is much higher with a mature founder team. And when it comes to our involvement, of course, I cannot be on the board forever. There is a natural progression where the later stage guys come in and we eventually drop out of the board. Well, now I have to be careful what I'm saying, but again, I really have been shocked and disappointed by the quality of governance that VCs in general have shown over the last few years. And of course, it also had to do with the hype. The hype really had some very negative consequences. And one of them was, of course, that investors did everything to get into deals and allowed the founders to do whatever they wanted. There was just no governance or very little. And that has come back to haunt everyone. And so, I think we as a VC industry, we have to really spend a lot more time with these companies and with these founders beyond board meetings. And of course, that doesn't scale. It only works if you are ruthlessly focusing on a few and not doing others. There's no other way. That's one way to think about it. The other one is, of course, senior VC teams are actually now showing their worth versus young folks doling out cash, right? As we've had to other young people, right? Young VC people doling out checks to other young founders. That game has been over for a while. So you just look at our EM team, very mature, very experienced team. There's practically no juniors on this team. So those are a few sort of learnings here, and hope to be smarter down the road.
Well, a last question for me, because you've sort of walked down this path quite organically, which is super interesting, and I don't think we've really talked about it on this podcast much. So I'd love to pick your brain on this and share your insights to everyone that's listening here today. Is advisors and advisory roles. Now, I read a TechCrunch article about 3 years ago, which said operators and advisors were absolute garbage, effectively, when it comes to startups. And they were not needed, and they were fat, and they were just excess with no need whatsoever. And that advisors should be junked from all startups everywhere. They're the bane of VC and startup existence. And a friend of mine from New York and I were reading this article together, and we were laughing. And another friend of mine from the UK, who is probably the most prolific angel investor in Fintech out there and as an individual. And we're all operators, and we're all laughing, going, surely this can't be wrong. But what do we know? I mean, you're a professional with a extremely substantial fund, a very large track record. You've been, you've been co-running First Data. You've been doing a number of things, and that's been 3 years past. But what's your take on both sides? Do you see a need for operator advisors in markets like emerging markets? Do you see value in them? Or do you think that people should be extremely wary in loading companies with advisors, because of governance issues, maybe the wrong kind of people on board? Is it detrimental or beneficial? What's the best way to approach this? And what's your experience is essentially what I'd love for you to share with us.
Okay, so I would separate this in two different topics. So one is operators, founders. So I think again, looking at our EM portfolio, really all of them have been operators in some way or the other in their previous life. So it seems like that's a good thing to have, to having run a company before you actually start your tech business. The thing is, there is a lot of operators that started business that actually failed also in sort of 17, 18, 19, because it turned out that they weren't entrepreneurs. So I think you have to have both, and that's pretty rare. So operator and entrepreneur, because operator obviously means you run a business, you know what leadership means, you hire and fire, all that. But entrepreneur is very different, right? I mean, you start from scratch, you start from nothing. There is nothing there. And you're like, I'm going to do it, right? I mean, you need so much confidence. You need so much passion to just get this thing started. That has nothing to do with operator. But that combination is really powerful. And yes, because it's fintech, because it's regulated, it does give you an advantage if at least one of the founders knows what he's or she's talking about. So to actually know your industry is, of course, an advantage. But that's not a winning prerequisite. I've also seen specialists fail utterly in their particular, because, very often they're one-trick ponies. They know everything about this one thing. But if it doesn't work, they have no alternative. They're not flexible. And of course, that's the other trait we're always looking for, this flexibility, this opportunistic behavior, feeling where the opportunity isn't going after it. That's
how do I get it done?
Something a lot of specialists actually don't know. No, and then on the advisory, I think indeed there are very important ways to use advisors in very good ways. I mean, just again, regulated. We now have two situations where these startups are thinking about acquiring a full financial institution, fully regulated. I mean, that is a tall order, right? And so you better have a very experienced banker on your side. But again, like of the 100 bankers you can choose from, there's probably only one that is the right person for that.
For that startup, yeah.
Yeah. I hope Ronit is now sort of, you're anyway not identifying yourself as a banker, right? Otherwise you wouldn't be doing this podcast, right? But
you're gonna ask me about my pronouns soon, aren't you?
I love this.
It's perfect. Banker / fintech.
Thank you, Stefan, for that. Thank you.
Yeah, he's been pretty hard on you at the beginning of the podcast, so I think he deserves it.
I know.
The whole purple thing, but let's not go into that.
The purple thing, that wasn't recorded, Stefan. That was before we went live.
Oh, I forgot. Oh my God.
Yeah. So the audience, if you're wondering what we're talking about, it's Gaurav can't see color. Gaurav doesn't see color.
Apparently I don't. Everything's black and white for me.
Oh my God, he's saying it again. Okay. Anyway, but advisors are very important. It's just that again, you need the right ones. And we really, when it comes to bank license in particular, you really need a good advisor. And then of course there's, along the journey, there's maybe not massive, but very important interventions that advisors can give on anything from coaching, to, going into dev teams and sort of, upgrading, sort of their their skills or their methodology. So I think advisors are incredibly important. And now the most important thing is independent directors, right? It's my favorite topic. So again, assuming you are regulated, you need to bring those people in a lot earlier. I think in most cases I've seen those people were brought in way too late. And typically what you don't do, you don't go from VC board abruptly to an independent board, right? There's an evolution, you bring in people one after the other, and those people can bring in a lot of rigor, especially when it comes to financial operations. Again, I think very often tech startups do that upgrade way too late. Just having a highly disciplined, reliable finance operation, doing the audits on time, just good board governance, right? Sign-offs, sending documents on time before the meeting, documenting, etc. So independence can bring a lot of rigor in there. Folks with an audit background, with a legal background, with a banking background. So picking those people is very important. Yeah.
I think, Stefan, thanks so much for all those insights. Before I hand back to Ronit, if you feel comfortable, anecdotally, if you can tell us if there's one investment, because you see so many and you can't win them all. If you had to go back and redo it with one that you missed, love to hear that story, because I've heard about friends who have missed investing in Uber at a $14 million valuation in the Valley and things like that.
Wow.
I've missed some as well from time to time. There was a crypto startup in Dubai with a person that started one of the first crypto podcasts out here. It did 125x. I missed out on that one. Do you have anything, or is it a perfect 100 on 100 for you?
Oh, I have plenty.
Give us your top five.
So I would start with and in all fairness, it wasn't, well, let's say a Trade Republic, right? So I had a chance to invest in Trade Republic. However, it wasn't the Trade Republic we know now. It was a company predecessor that actually failed, but it was the same founder team, and certainly had we invested, we would now be in the capital of Trade Republic, which obviously is a fantastic European fintech. All good, all fine. I would say another one is TaxFix. That's a good one in Europe. We had a chance to invest in the pre-seed round. And then our friends from Crandom and Valar and others piled in. So that was clearly on our list. Yeah, I guess. What else? In EM, I don't think we missed a great deal, but we also obviously were a lot of, what can I tell you? It's also not seeing some of those deals and not being even able to get in front of them is already a loss, right? So clearly, Tabby tomorrow we've actually never seen. So maybe our fault. I don't know. I should have met you earlier and speak with you earlier.
Don't worry, we'll send you stuff
that
from
gives
Angel Spark.
Yes. So are you happy now? Yeah.
Always, because I've missed out on things too. I think Ahmed Balagi, if you're listening to this, 125x. Forgive me, I wish. Ronit, thanks a lot, Stefan. Ronit, back to you, brother.
Just to wrap it up, Stefan, you've been in the VC business how long now?
It's not that long. I mean, I joined Speedinvest 2014, but
10 years.
Was an active angel since 2009.
Right. 2009. And when you look back on these 10 years as a VC, 15 years as an active investor, the kind of final question is sort of lessons learned as you reflect back on and you go, was it what you expected it to be 10, 15 years ago, being an investor, either as an angel or as a professional managing other people's money? How would you compare the before and after, how it started, how it's going?
So I certainly didn't know what I was getting into. and I certainly didn't know at the time as an angel how much fun it would be. I really, and fun is probably the wrong word. Being just having such wonderful experiences with people, really, and it comes back to founders and co-investors. You remember when you go back to school, the people you went to in school, and you had a common enemy, which was, of course, the teachers and the director of the school. I mean, it creates an enormous bond. In this case, it's just this journey which is ahead of you, which is so exciting, but at the same time frightening. There's so much that can go wrong. There's so many things you don't know. So it's really a journey into the unknown, and you do it together if you come in early with those founders. And in 2010, 11, I still had a lot more time to concentrate on few investments, and that was wonderful. It was just an exciting journey. And then I would say, I'm typically 20 years plus older than the founders. It's a little bit, you see these folks growing up. You see them making mistakes. You see them, raking in success. And that's just a beautiful thing. It's just in my stage of life anyway, to see how some of these talents really flourish and also become wealthy at times. But that is not even the point. It's more of them just growing massively, because in many ways, tech startup, it's like, what do you call these cookers? These rice cookers. You cook a lot faster. So it's like an experiment under enormous pressure. And so these people just go through a massive transformation as personalities, and that's a wonderful thing to witness. So I did not expect that, and I have 4 kids, so it's almost like my second family in a way. Of course, I shouldn't say that because it's a business at the end of the day, but it's so much more. So it's I would say those personal relationships are really what I cherish and what gives me a big kick in this business. Yeah.
And if you were doing it all over again, you'd do it again?
Oh, 100%. Yeah. I probably would have invested in India a lot earlier. Yeah.
Me
Brazil.
Too. Me too.
Yes. Yeah.
Hindsight. Oh.
Stefan, thank you so much for joining us today. Look forward to running into you, hopefully more in Dubai now that you're expanding in the GCC. And
100%. We'll meet you there, and hopefully then in November in Singapore, right?
And maybe before that, Gaurav and I will see you in Vienna.
Yeah, we'll see you in Vienna.
Exactly. I'm hoping, very much
Vienna,
hoping.
here we come. Or is it Bratislava?
Great.
I don't know.
Ronit, you're not
50
getting
minutes
brownie
apart.
points. You're not getting brownie points. Thanks so much,
Central
Stefan.
Europe, Middle Europe,
All
here
right.
we come. Thanks,
Great talking to you
guys.
guys.